watching famous games on YouTube.
Hello and good morning, and you are watching the Short Vol Show live, coming to you live from Cape Cod, Massachusetts on July 21st, that being my birthday. So we had another really big rally day yesterday with Tesla resuming its rally, the VIX making lows. We're coming into expiration on the VIX tomorrow, I believe, and really the term structure shaping up to be in a real contango shape, and also just really the VIX signaling like all full steam ahead for the markets as the VIX moves lower. We took out the 24 handle yesterday. Let's take a quick look at the VIX, then we'll check out the term structure after that. And as we check out our Thinkorswim platform here, we can see the VIX moving lower. Seems to be no concern. Now, my feelings on the market are wrong again. But the good news is, at least for me, is just that I haven't really acted on those feelings, and I've managed to kind of stay out of the way. People who follow me closely might have heard about me talking about being short Lulu, and I managed to really not have positions on these big run-ups. Fortunately, I did play around with a short yesterday, which gave me small losses, but I guess I lost like $200. But we'll take small losses to avoid bigger ones when I'm clearly out of sync with the market right now and wrong a lot of the time. But I really feel like we can't continue in this upward trajectory for very long, and I think there is a day of reckoning coming for us. That's why I've been very careful. If you caught my appearance on Volatility Views last Friday, you would have heard similar sentiments from me. And I was talking about, strategies to be long VXX or UVXY, but I haven't actually pursued those strategies. I've been laying off trading the volatility products most recently, but let me get, as promised, to the VIX. We can see even with this down move here, we are still kind of in the wake of this big spike that we had back in March, right? So we're still not kind of out of that. We had this other mini spike in May that we've come off of, and we're kind of at the low for the VIX since that big spike. So it'll be interesting to see if the VIX continues to move lower. Also, VVIX still above 110, but as we usually say, VVIX more about the trend, and the trend seems to be it's kind of just holding in place right now, VVIX, so probably not that significant of an indicator. As I mentioned yesterday, we did get the big pop in Tesla again. If we look at the 10-day chart, we can see it kind of we had this reversal day, and then it's just kind of sat around, slightly moved lower to sat around. I guess you could call it consolidating now that we've seen that pop up. And much has been made of the market consisting of these 5 monster of tech stocks kind of pulling stuff one direction or another, as opposed to the rest of the market. We've seen a lot of strength in the healthcare industry over the last couple sessions. That due, of course, to hopes about a vaccine for the COVID. And so, but the other thing that's been a theme recently that I'm sure you've heard a lot about if you've been following the markets closely is we had last week a convergence where we had the Nasdaq coming and the rest of the indices converging, right? We had the Nasdaq's kind of underperforming the rest of the market. Well, that again reversed yesterday, and we had really the Nasdaq just launching upward with actually the Russell down on the day, and the SPX up on the day, but just not moving as much as the Nasdaq higher. Yesterday it was Amazon. It's different stocks that take the lead every day, it appears. Yesterday it was Amazon, but Apple and Microsoft also participating. plus, as mentioned before, Tesla up, $143. So it's interesting. I'm active in all these Facebook groups, and I'm interested to see what new retail people are talking about and what they're doing. And a lot of people just jumping into this market with abandon. I saw multiple posts of saying things like, I have $5,000 to invest. Which stock should I invest in? Or, I'm long Tesla calls. What should I do? And, in a way, I wish I had that, innocence of youth and could just go long Tesla calls without a care in the world. But alas, my cagey veteranness has me pretty much sidelined right now, just because I'm in awe of the fact that this market continues to rally, and I'm looking for an opportunity to get shorted. But I've been being very careful because, as you may know, getting short a market that is ripping upward like this can quickly separate you from your money, and that's not what I want to do. So it's left me in this real quandary where I'm just very small, kind of on the sidelines. But that's okay. We can accept the fact that we're just small on the sidelines at times. All right, let's go to the Vix Term Structure here. I want to stay on task today so that you just have an interesting report and can move on with your life without me getting sidetracked. So let's take a look at the Vix Term Structure here. And you have it. And yeah, I am getting closer to 50 years old, folks. Amazing, huh? Considering the average person on YouTube is, I think, 13. That's pretty amazing. So we see front month contango 11.83, and many of my co-participants will point out to me that this number is basically irrelevant because we are just about to come into expiration, and most people are looking out to the second number, which is also significant compared with what we've had this year so far at 5.57%. Between the month 2 and 3. Now remember, after tomorrow, this July month goes away, and we are on to the next month, getting closer to that October month for the elections. And it was interesting being on the Volatility View show on Friday. I was interested in listening to Mark Sebastian's assessment of the situation, where he sees an opportunity. It certainly appears that there's an opportunity to be short some of these volatility products as stuff seems to come in. However, my personal feeling is that this level is justified, and the signaling of this high out by the election is justified, and I think we will get fireworks between now and then. So I am reluctant to be short this stuff. Now, if you had been short volatility, though, over the last couple weeks, you would have made money. So, it's one of those things where maybe you shouldn't be following me right now if because I appear to be doing the opposite, or not doing the opposite, but at least thinking the opposite of what the right thing to do is. My idea would be to lay off volatility right now, being short it, but look at this down move. We can see here's UVXY. Okay, so since July 13th, we've come from 34 down to 24. So that is a very significant movement as far as percentage terms, and just any way you look at it. So that's kind of where we stand, but I believe we could definitely launch off this area, but I've been reticent to actually get long volatility because, like I said, I've been wrong. It's been trending lower, and I just didn't want to jump in front of a truck here. I do think we'll get a pop. I just don't know when it's going to be, and I'd rather just lay off for now and once again protect the money. You can hear that as a developing theme here, to protect what you have, and when you're not so hot, to just maybe lay off and let the situation play itself out on its own without you losing money. What is up? Thank you for the birthday wish, Philip. And hello, Marcella. What's going on? The VIX is a lie. Well, it has some significance. I'm just not quite sure what it is right at the moment. As we see Nasdaq futures kind of backing off where they were earlier today. If we take a look at what happened overnight in the Nasdaq, and let me get out of the way to do that for a second here. If we take a look what happened overnight, we can see Nasdaq futures were up a lot more earlier today. So if we go to /NQ, and we pull up the daily. This is what's happened since 7:30. We've seen it kind of move lower. If I back that up even more, so we were up here, 1155, which was a little bit over up 100 on the Nasdaq. Now we've lost half of those gains. Just to refer back to Lulu, which I was talking about yesterday. So I got short Lulu yesterday after it had made the big up move. So I got short around this, probably right around here, 328. And then it just ripped my head off. But fortunately, I didn't cover up here, and this down move we got into the close kind of saved me. But we'll see what happens now, because Lulu bid on the open. It did trade up to 30.31. Right here you can see, and this being the all-time high in Lulu. Lulu continues to be talked about as one of the winners of the the stay-at-home orders, people sitting at home ordering fancy yoga pants from their computer at home, is what the story of Lulu appears to be. But my feeling is just that, yeah, okay, that's great, and people have bought the stock up, but I haven't been short all the way up or anything. But once we get up to these levels, which are, the all-time high and way higher than before the virus came in, remember now, Lulu did purchase Mirror back in here at some point, but looking for a pullback here at some juncture. But I'm being very careful because I know that this thing can rip my head off. So that's kind of where we are with Lulu right now. And my position coming today, I am short 30 deltas, something like that. Let's take a look at the, this says 57, but I don't think that's the right date. Let's take a look here. So that's on the, move this to the 21st. And let me just make sure that we're all good here. So that has a couple trades on it that don't exist, so take those out. And yeah, short 30 deltas here. So if it does indeed open up here up 2 points, I lose $60, which is a bummer, but no big deal. And my feeling is always to just have some short deltas coming into the day, because one of these days we are going to get a down move, in my opinion. And I seem to not be in the majority in that opinion. And I went for years like listening to people talking about the market, being bearish on the market, and just totally disagreeing. But as of late, I have just based on the economic situation and the disparity between the market and actually what's happening on the ground in the United States, I'm just not a fan of this market, and it's confusing to me why it continues to rally when the actual economic news is not justify the rally. So I've been wrong a lot, and the key is, while you're wrong, to try to manage to hold on to your money while you're wrong, so that you still have it when you get right again. Tweets. Yeah, I don't know what the sell-off is. We could potentially pull up Trader TV. I just don't want to get like some sort of strike against me, but let's try to look at it really carefully out of the corner of my eye here.
The classified sale had been in the process. Been a number of potential buyers.
I'm not sure if it's tweets or whatnot, but we have backed off a little bit, and we'll see what happens as we come into the open here, as we are getting pretty close to the open. But once again, expiration tomorrow morning in the VIX, and we've really pulled back from where we were before in the Nasdaq. But once again, shouldn't be surprising, because this continuing rally forever just doesn't seem maintainable to me. So once again, I'm out of sync with the market. I'm very bearish, and so because of that, I'm not involved in any sort of short vol activities, and have my finger on the trigger looking to short some of these issues, including Apple, and possibly Tesla along with Lulu at the first sign of a down move here. You know, the other big winner that we've seen recently is Wayfair W. And this company, although they have not even been profitable yet, has signaled that they will become profitable maybe in the next quarter, which was an upgrade from what before they were saying they wouldn't be profitable until like mid 2021. Now they're saying they could become profitable next quarter. But even so, just an amazing up move in Wayfair. And remember, the stock market is not about picking companies that do well. It's about analyzing the value that other people have of companies and seeing if that's correct or not. So, you know, you can pick a company that's doing well, like Apple, but people might have overbought the stock. And I really believe that these big tech giants are the things we should be watching. We see gold way up again. That seems to be a hedging activity, gold way up. Let's take a quick look at gold, but I'm going to let you go to get back to your getting ready for the open here. But yeah, gold, look at the move in gold recently. I mean, that's just a remarkable move. I think this speaks to the fact that the dollar's being devalued as more and more dollars are printed and more debt occurs. In my mind, gold price doesn't change. What changes is the value of the currency around it. And as the dollar becomes weaker, it costs more dollars to buy an ounce of gold. That's how I see the gold price going higher. It's just the dollar is not going to be worth as much in the future, and thus gold costs more. All right. Thanks for watching. And thank you for the birthday wishes from you folks. And I will see you soon. Best of luck trading today. Looks like I'm Ghost Dave here. And I will see you next time on the Short Vol Show Live.
You're watching Famous Dave.
Yeah, CL up to a little bit.
Only
Oil up a little bit. Looks like up $1.26 right now. Thanks, Philip. I'll see you guys later.